Hello all, myself Ms.Mithra.B, Assistant Professor from Department of Commerce, Digital Marketing and Data Mining. In the previous lecture video, we saw about liquidation and what are the needs, importance and features of liquidation. In this video, we are going to see the continuation of liquidations and in corporate accounting, IFRS, International Financial Reporting Standards. What is meant by international financial reporting standards? In the sense, IFRS is a standardized framework for financial reporting. Yes, of course, it is one of the framework for financial reporting intended to make companies account and comparable and reliable globally. It sets the rules for recognizing, measuring and reporting financial transactions, allowing shareholders to make informed economic decisions. So this is known as meaning of IFRS. What are the need of IFRS in the sense? Globalization of business. As business expand internationally, nationally, globally, consistent reporting standards are essential to ensure comparability across border. Yes, of course, it is an international financial reporting standard to ensure comparability across the border is very important. The next thing is investor transparency. IFRS enhance the clarity and reliability of financial statement, enabling investors to access and compare companies' accuracy. So, investors' transparency through the period of financial reporting through borders is very important. Regulatory compliances. Many countries have adopted or their accounting standards with IFRS to reporting requirements and reduce compliances cost. So, for reducing compliances cost also, the IFRS plays a major role. Need of IFRS in the sense, globalization of business, investors' transparency, regulatory compliances. The next thing we are going to see is importance of IFRS. It improves comparability, enhances credibility and trust. It facilitates cross-border investments, which means IFRS provides a universal language for accounting, which allowing companies from different countries to compare the basis. And the next thing is enhance credibility and trust. By ensuring transparent financial reporting, IFRS helps build confidence among investors, lenders and other stockholders. Facilitates cross-border investment. What does mean by facilitating cross-border investment means IFRS adoption reduces barriers to international investments by standardizing reporting, making it easier for foreign investors to analyze and invest in companies worldwide. What are the key components of IFRS? Cover specific accounting topics such as revenue recognition, financial instrument and lease. Example, IFRS 15 for revenue from contract with customers. IAS standard, which means International Accounting Standard, whereas the IFRS, the standard continues to apply where not by IFRS. IFRS interpretation. What does mean by IFRS interpretation? Which means issued by the IFRS Interpretation Committee to provide guidance on specific or complex financial reporting issues. It is known as IFRS interpretations. These are the key components of IFRS. The next thing is process of IFRS adoption and implementation. National adoption, transition process, training and system update. What are the process of IFRS adoption means? Countries may fully adopt IFRS or adopt it to with local accounting principles, which means IFRS convergence. Next thing is transition process. What does mean by transition process? Which means organization transitional to IFRS must relate to financial statement to comply with IFRS requirements. The next thing is training and system update. Adopting IFRS requires organizations to train their accounting staffs and potentially update accounting softwares and processes to with new standards. Upcoming new standards in future, and training and system updation is one of the major thing in IFRS adaptation and implementation. In this lecture video, we saw about what is meant by IFRS, needs, importance, key components, process and adaptation and implementation. Thank you.